Hello, good morning, happy
Good
Tuesday.
morning. Happy Tuesday.
So excited to be here. Where are you at today?
Today, I'm actually in Miami. I am out here for the Miami Open. So we're super excited. I'm here with Kristen for just the day to go watch a match. So we're on our way
That's,
there after this call.
that's so awesome.
Yes.
As you've been doing your tennis lessons, and I'm so technologically just inefficient that somehow I turned my Instagram into German today, and so I had to navigate
Oh,
my way around that too. So that was really fun.
I mean, are you telling me you don't know German? Like what?
So let's get into what we're good at, and that is market
Yeah.
update.
Yes, yes. There is a lot of uncertainty right now because what you've been preaching, tariffs, it's definitely causing a lot of chaos in the market, right? And it's so early to tell how this is really going to play out. I keep getting asked like, how is this going to play out with market rate? It's still too early, but we are seeing that the stock market is on the weaker side these days. So
Okay.
we'll have to just kind of wait and see how that plays out.
Okay. Yeah, and I
Yeah.
think another big thing is, Fed kept short-term interest rates on hold as well on March 19th when they met, but mortgage rates didn't decline, obviously. We saw some increases yesterday, actually, but we've seen a lot of multiple offer situations. So I think people are gaining a little bit of confidence back in the market with that. So that's good news on everybody's front. There's more inventory as well, so that there's more
Right.
choices for buyers. And, with rents rising and everything, I think it's important that they know that they have stability in their housing payment. So,
Yeah, I do. I have seen that. And there was a bit of an increase in the month over month sales in February. So that's a great indicator. And I think are, I think the reason why we saw that increase is because in January, people were just getting back from the holidays. So
yeah,
it was a very slow market. Um, so I do think that this year, I mean, with the growth, the increase that we've seen in just 1 month, it's a good indicator that this year will be a pretty good year for you to buy or sell or just to get into the market whenever you're ready, of course.
yeah. And we talk about it too, and people wonder what dictates the Fed funds rates remaining the same. And we talk about the reports that we see that cause fluctuation. But if you look, whenever they had their conversation, GDP growth was revised down, core PCE was inflation revised. So all these numbers get revised, like unemployment, and their expectations of that. And that's what they kind of look at, because those initial reports that come out aren't really the most accurate. They have to re-review them and revise them down. And so that's why we see those
Right.
moves or we don't see those moves on it.
Yes, reason being, a couple weeks ago when we mentioned that we were expecting a Fed meeting last week, and that hey, we're not expecting a cut in the March meeting, but we're expecting one in May. Now the probability of
Yeah.
seeing a cut in May has gone down.
Yeah, because
Um,
they want to slow that quantitative tightening,
right.
because we don't want to see upward pressure on rates, right? But we don't want to see a major drop quickly either, because that's going to cause more inflation. So as much as we're hopeful, um, it's not going to cause that.
Yeah. And I think it just goes back to hey, like the market, there's so much uncertainty on a daily basis, and it's because of that constant review of data that needs to be done to make those decisions of like, are we going to cut the rate or are we not, the Fed rate. So it's just a matter of like staying on top of it, staying informed to see
Yeah.
how the market's going to be impacted. And I think that's our mission here with our Tracking the Market Tuesday calls, is to make sure that everyone's educated and feels like they know what's going on, right? Stay in the know, because
Yeah.
I promise you it's going to change. By next week, we'll probably be back and saying, oh, we're going
Yeah.
to have a Fed cut
Well,
in
and it's always
May,
a
but
future
we just don't know.
prediction. Like the
Exactly.
market right now that's running is really deciding what's going to happen between now and May and that next Fed meeting. So they're really based on the predictions of what they say. I always say it's never whether they drop the rates in that moment, it's what they say in that meeting that's causing what our rates are next. So I think that that's
Right.
really important to look at too. So that's the same thing we're doing is we're looking at what is currently happening in the market and is that going to change anything? So um, just know that we don't have a crystal ball, but I think
If
that we
we
have
did, we would
brighter
read
futures
it.
ahead too.
Yeah, if we did have a crystal ball, I'm sure we would have it at the Apley office because we're all eager to know what's going on and what to expect.
And the thing is, you know, everybody has huge equities right now too. So talking to your clients about tapping into home equities, whether they want to access that to buy other properties as well, if they don't want to sell and move, but also renters, they have to start building long-term wealth because housing, you see the biggest long-term wealth jump than anything else that we see. So if they don't have housing to build that long-term wealth, what are they going to do? Because they're paying somebody else's mortgage and building their wealth for them.
Right, right.
So
So I think if you're curious just to see like where you're at and what you need to do to get closer to homeownership, Ashley and I would be more than happy to connect with you
of course.
and put together an action plan for you to make sure that you are ready to move forward into homeownership and you're making the right decisions financially as
And
far
put
as
it
your
into
preparation.
ABCs for your clients and just know like that's why you work with us. You don't have to know all this stuff. Put them in contact with us. Like you can tell them about the housing market and what that looks like. Let us talk to them about the rate market, why it looks like this, what they're hearing, because we all know just like we Google our symptoms, we also Google all the rates and we listen to our mother's brother's cousin that bought like 20 years ago that's totally different market, you know? Just like everybody believes the market's going to crash too, but it's not. Like that's not. We're not in the same market. We're not feeling the
No,
same
and I
pressure.
think there's so many regulations after. I mean, that's why things have changed since the
Yeah,
market crash. There's so many regulations to help avoid a crash, and I think people don't know that. People think that it's all still
exactly.
the same, and it's not. So,
Exactly.
but
Very, very
well,
true.
we will be here next Tuesday again. And as always, if you want to join us, if you want to
We
hop
love
on with
questions,
us,
a guest, whatever.
yes, let us know. I know Ashley and I are more than open to talking with anyone about it and bringing you on.
Yeah. Well, have fun today. Take pictures. Love to
Yes,
see you
I
on social
will.
media.
I'm gonna
Bye.
go get my tennis life going.
All right.
All right, bye.